Hey, it's Jeff Garber, mortgage expert. This is your interest rate update for the week of Monday, April 11th. And I'm also going to try something new here. I'm also going to add a weekly mortgage tip as well. So, you ever wonder what points are? Everybody's heard the term, but not many people really know what they are. Well, stick around. After I do my interest rate update, I'm going to tell you what points are and when they may or may not make sense for you to pay. All right, so let's go to the other side here. What you're looking at here is the bond market, more specifically, mortgage bonds or mortgage-backed securities, and they trade in the bond market every day, Monday through Friday, and this is where 30-year fixed rates come from. Okay, and the chart's pretty simple to read. Green would be a good day, red would be a bad day, and the only thing we need to be careful of here is bonds interest rates react the opposite direction to what bonds go. So if bonds are heading down, mortgage rates are heading up, and you can clearly see, if I draw this, you can clearly see this downtrend from the beginning of March, showing the significant rise of mortgage rates from the lows that they were. And this is because as bonds sell off or go down in price, mortgage rates go up. Now, what you're seeing today at the time of this recording is actually a nice green candlestick. This is much anticipated. We've been waiting, and hopefully this is it, but we won't know for sure until another day or two. But we're hoping that maybe the bond market hit a bottom here, and maybe it can reverse trend, and we can get a relief rally. And we can have some good green candlesticks, because as green candlesticks head north, mortgage rates are heading south, and that's what we want. We want rates to come down. So maybe we're getting a little bit of relief rally. We're going to have to watch this carefully. The reason you're seeing this nice green candlestick today is because the consumer price index came out today, which is a measurement of inflation. And if you've been watching my videos weekly, inflation is the kryptonite to the bond market. So if there is inflation, rates are going to go up, bonds are going to go down. And that's what we've been seeing almost the whole year so far. But the consumer price index today, the core rate, which strips out food and energy, actually came in a little bit better than we thought. Still nothing great, but enough to make the bond market say, hey, you know what? That wasn't as bad. Let's rally off of that. And that's what you're seeing right now, at least at the time that I'm recording this, is a little bit of a rally in the bond market, which we've been waiting for a while. We're hoping that continues. Rates did turn the corner and head into the fives. If you Google average mortgage rates, they're probably going to come in somewhere around 5.3 to 5.5, maybe 5.6 or so. And as a disclaimer, these are not rate quotes. If you want a rate quote, you need to speak to somebody qualified to give that to you. I am just basing my rate updates off of averages, national averages. So we're going to keep an eye on this. Again, we hope we're getting a bit of a relief rally. We'd love to see bonds head north, maybe break through a couple of these ceilings that we've been hitting before that have been tough to get through, and see if we can get a little bit of a rally. So I will break it all down for you next week, and we'll let you know where we're at. Okay, so what are points? Let me come back over here. So everybody's heard the term. A lot of people really don't know what they are. And you have to be careful, because sometimes when you're talking to lenders and you're getting your numbers, you may or may not know if there are points or not. So what is a point? Well, 1 point is 1% of your loan amount. So if you have a $100,000 loan amount and you pay 1 point, that would be $1,000. So $200,000 loan amount times 1 point would be $2,000. So the higher the loan amount, the more that 1 point is going to cost you. Now, why do people pay points? Well, a discount point is a good way to get a better rate. Right? Usually a lender will offer you what's called the free rate, meaning the rate that they can give you without charging you anything for it. Okay. If you want a lower rate, you can say to the lender, hey, what would my rate look like if I were to pay a half a point or 1 point or 1.5 points or 2 points? And you might be able to get a better rate by paying points. Now, what you have to be careful of is when you are talking to people and getting quotes, some people will quote you a rate that already has points built into it and you don't even know that. So if you're talking from lender to lender and there's a big difference in rate, you need to find out if there are discount points in this rate quote. Because if there isn't, then yeah, maybe you're getting a better deal. But if there is, your closing costs could be higher than you thought. So it's very important that you understand what a point is and when would you want to pay that. Now, in a rising rate market right now, there's two schools of thoughts here. You could pay some points if you have some of that disposable money to do so, and that will help keep your rate down and keep your payment lower. Or if you're under the school that we're under, that in possibly 12 to 18 months, that maybe rates come back down And if they do come back down, then that's going to create another little refi boom, in which case we can then refinance your loan and get you a lower rate. So the advice that I'm giving to some of my clients right now is let's try and take the highest rate that we can get that's free, knowing that in 12 to 18 months, there's a good chance that rates could come down. And we don't know that for sure. So if you are under the school of thought that rates will never come down and they're just going to keep going up forever, well, then I would say pay some points if you have the money, take the lowest rate, lowest cost loan, and you'd be good to go. If you agree that you feel rates may come down, then it might not pay to pay anything extra now, knowing that we're going to refinance you in 12 to 18 months, save your money, and then we'll get you a lower rate later, which will lower your payment. And you can put your money somewhere else where it might be better needed, like paying off debt or investing. So that is what discount points are. Make sure you understand that if you're being quoted rates, that you know if it's with any points or without. And you could also ask what the rate would be if you wanted to pay some points or not. So I hope this helped. And if you have any comments, leave them below. If not, I will catch up with you next week. Have a good one.